A single tech stock just skyrocketed to a $4 trillion valuation thanks to the AI frenzy. Then one shock wiped out $600 billion of its value overnight. This might be the biggest investing frenzy since the dot-com era. And if you're pouring money into AI stocks today, you could be on a wild ride. Stay tuned, because in the next 10 minutes, we'll uncover the hidden traps of the AI investing bubble and how you can still come out on top when it all shakes out. Quick heads up, I'm not a financial advisor. This video is for educational purposes only, so do your own research before making any financial moves. AI is the new gold rush. Since late 2022, AI stocks have exploded. Nvidia up over 760%, Palantir up more than 600%. Even big players like Microsoft jumped nearly 90%. It's been a feeding frenzy on Wall Street, with everyone chasing the next AI jackpot. And it's not just stocks. Silicon Valley is all in on AI startups too. Take OpenAI, the company behind ChatGPT. It soared to a $157 billion valuation almost overnight. Now rumors say they're seeking an eye-popping $340 billion valuation in new funding, even though the company is still burning cash. Venture capitalists have poured record money into AI, over $78 billion in 2021 alone, and even in 2024's tighter market, AI funding hit new quarterly records. There are over 1,400 AI startups scrambling for a piece of the action. It feels like anyone with AI in their pitch deck is getting a blank check. But when everyone is struck with gold fever, you have to wonder, is there really enough gold for everyone? We've seen this kind of euphoria before. The question is, how does it usually end? Flashback to 1999, the dot-com boom. Investors were throwing money at anything with a dot-com in its name. It was true, the internet was revolutionary. But that didn't stop the dot-com bubble from bursting spectacularly in 2000. Even great companies saw their stocks crash, and many others vanished. In fact, Microsoft's stock was so overhyped in that era that it took 16 years to recover its peak price, despite the company's real success. History is full of manias. In the 1630s, people paid fortunes for tulip bulbs, betting they could sell them for even more. The classic tulip mania. More recently, think of the crypto craze or the NFT bubble. Tons of hype, then a harsh reality check. This pattern is eerily similar. A transformative innovation comes along, everyone piles in out of fear of missing out, prices go insane, and people start saying, this time is different. But eventually, reality catches up. When a breakthrough is real and everyone is chasing it, a bubble is almost inevitable. AI is amazing, no doubt, and that's exactly why so many investors are losing their minds over it. So, is AI just hype or the real deal? It's both. AI technology is real and already changing the world. But the hype has pushed expectations and prices to extremes. How extreme? Consider this. Earlier this year, the combined value of just a few tech giants jumped by $3 trillion due to AI excitement. That's about 150 times the new AI revenues those companies might see. 150 times. Normally, these stocks trade at maybe 5 or 10 times their revenues. You see the disconnect. Investors are effectively pricing in decades of future success today. For instance, Nvidia's valuation is so high that one analyst calculated the company would need not only to dominate AI, which it does now, but also find another market as big as AI to dominate to justify its price. Sounds a bit unrealistic, right? Meanwhile, many AI startups with sky-high valuations haven't proven they can make any profit. Remember OpenAI? They might have huge user numbers, but they're reportedly losing $2 for every $1 in revenue right now. If a company burns cash that fast, no valuation can save it forever. At some point, fundamentals matter. What happens if AI's progress or profits don't live up to the hype? The answer? The bubble could burst, and it could get ugly. In fact, some warn this hype has set the stage for a spectacular bust in AI stocks. We know bubbles burst, So, what might pop the AI bubble? And what then? Let's explore that. Bubbles tend to burst when no one expects. Maybe it's a negative headline, a policy change, or just buyers running out of money. With AI, it could be anything. A big company saying, you know what? This AI isn't boosting profits like we hoped, or a new technology that undercuts the current leaders. For example, an open source AI model emerged and erased 15% of NVIDIA's value in one day, about $600 billion gone. That's the largest single day loss for any company ever. Imagine waking up to your favorite AI stock down 50% because the hype turned to panic overnight. In a bubble, fear spreads faster than hype ever did. Everyone rushes to the exit at once. Trillions of dollars can vanish in weeks once the bubble pops. Many of those 1400 startups will crash and burn, just like a lot of dot-coms did. Nobody knows when it will happen. It could be next month, next year, or a gradual fade. But betting your life savings on AI always goes up is as risky as it gets. You don't want to be the last one holding the bag when the music stops. Quick breather. If you're finding value here, hit that like button and subscribe. It really helps a channel like this. Alright, back to the video. Okay, all this sounds scary. So how do we invest wisely in an AI craze without getting wrecked? Here are some smart principles to consider. Diversify. Don't bet everything on AI. Yes, AI is exciting, but it's still just one sector. Spread your investments around. Even the best tech can hit roadblocks, and diversification is your safety net. Remember, even a superstar like Microsoft went nowhere for over a decade when its stock was overhyped. Do your homework. Fundamentals matter. Before you throw money at an AI stock, check the basics. Is the company actually earning money or at least growing users sustainably? If a firm is valued in the hundreds of billions but losing money hand over fist, that's a red flag. Don't buy just because it has AI in the name. Hype is not a business model. Think long term, not get rich quick. If you believe AI truly is the future, consider a long term approach. Expect ups and downs. The real winners of the internet boom weren't the day traders of 2000. They were the patient investors who held quality companies for years. So, if you invest in AI, be ready to hold through volatility. Make sure you're investing money you don't need next week or next month. Manage risk and emotion. Only invest what you can afford to lose in speculative bets. Seriously. Bubbles seduce us into abandoning caution. Don't fall for FOMO, fear of missing out. If your friend brags about doubling their money on some AI penny stock, remember that fast gains can reverse even faster. Stick to a plan, and if you do score a big win, consider taking some profits. There's no shame in securing a gain. These principles aren't flashy, but they work. They'll help ensure that when the dust settles, you're still standing, and maybe ahead of the pack. AI is likely here to stay. It really could change the world like the internet did. But even life changing technology can go through crazy boom and bust cycles. The key is not to get swept away by hype. Remember, the goal is to build wealth, not to gamble it on the trend of the moment. If you keep your cool and invest with a level head, you can benefit from AI's rise without being one of its casualties when the bubble fever breaks. The AI revolution will have winners and losers. By learning from history, you're putting yourself among the smart investors. When others panic, you'll be the one who knew better. Stay curious, stay cautious, and good luck out there.